It doesn't understand that I'm live yet. Come on, YouTube, you can do it. I believe in you. It's like upcoming, upcoming. This one is not upcoming. It's now. It's live and it's now, YouTube. Why are you so bad at this? YouTube is the worst, I guess. That's okay. I don't need YouTube to tell me what's up. I really wish it knew I was live though. Maybe if I just edit it in the, there it goes. Now it sees it. All right, let's get some tags going. I don't think it tags it automatically, and that's really annoying because then people don't find it very well. So I have to go through and I have to like type every single one of these tickers out that I'm gonna be looking at. So I'll just hit the big ones, I think. I'll put BBIG in here too. I'm gonna go over a lot of stuff, really a lot of stuff, a ton of stuff. Maybe I even look at SLV today. Maybe I look at the dollar a little bit too. Tesla, is that in there? Okay, I think that's good. Gonna hit save there. Now it's got some tags. It'll pop up in people's browse features, and I'll be able to see the chats because I'm gonna actually monitor the chat through the stream. Oh, I can hear myself. You probably hear me streaming there too. I'm just gonna scroll that down, and actually I'm gonna pause this. Stop live playback. I like that. Okay, yeah, stop live playback. And away we go. Yes. I'm gonna look at the chats here. Okay. All right, we're set up. Is anybody here yet? Can I even see that with this screen? I wish that there was a better way to do this. We have one watching. How's it going? Who's here? Welcome. I'm gonna start with NVIDIA actually. Got a tweet. Someone was asking me about a right shoulder at 435. And I thought that was kind of a weird question. I think maybe they're asking specifically if I thought we were gonna get a head and shoulder top through here. I don't know. I don't think I want to try to guess the chart pattern very much. I admittedly don't have an Elliott wave count for this. It looks like I might though. See, this is what's so confusing about corrective waves is you can get like a motive wave push through here. Like this looks very motive to me. Let's just go through and let's make sure we actually have a motive wave coming off of the high at 2021. And let's see, is this a, ooh, look at this extension tool. Okay, we're zooming out here. What's that? Wow, what's that coming from? Let's go to the monthly max. Ah, okay. Why there though? That's an interesting spot. I'm gonna change the time frame into the weekly. And maybe that'll give me a better idea of what I'm doing here. I've got a cat today. Hello, cats. Can you see her? I think you can. Let me check. Nope, you can't, but she's here. Just being annoying. Come here. There she is. Yeah, she's a pester butt. That's what we call her because she's always asking for attention. I'm really curious why I chose to start that extension tool right there. Kind of a weird spot for it, huh? Why would I do that? That's so interesting. It's in a weird spot too. I feel like I should have done this back here. Maybe it got moved. And that moves that 100% target to right where we are at 410. That makes sense, okay? Because we're looking for the measured move from this initial impulse heading higher. I'm going to be doing a lot of analysis here, it looks like. Whew. Definitely, this is a big three-wave pushing through here. Big, strong push. We're going to start a new chart. Let's do it. Ooh, look, drawing set name. Nothing's here. Nice. Looks like there might be a little something in here. We'll just draw this, clear this chart drawing set. Yep, there we go. Okay, let's go. Let's start at cycle wave just for the hell of it. I think cycle wave is 1, like this. Yep. And then we'll call this down here 2. And we're gonna note that is that a sharp or a flat? It looks like a sharp, but with like a truncated C, but like, I don't know. I think we get a better idea of what that'd be like if we knew where wave 4 was, and then we could say we're looking for alternation. I'm seeing that this corrective wave right here kind of matches this one. So I'm thinking this was probably part of a third wave extension, 1, 2, and this is all 3 through here. 3 has peaked. Now we're looking for wave 4. Wave 4, this could be a big corrective 4 through here. 4 could be some sort of expanding pattern. That'd be annoying. That'd give us the impulse down off of the all-time high, a big 3-wave correction heading higher where wave B may set a new high, and then we'll watch wave C and see what wave C does as it heads south. It's going to be interesting. It's going to be interesting. I'm gonna stick with that. Yeah, we're gonna call this 2, and we're gonna call it, we're not even gonna label it. It's just kind of ambiguous to me whether it's a sharp or a flat. In fact, it could, if I put it back here, we can say that this is just the correction, but that looks like A, this looks like B, and then C. No, I definitely need to get something in here that makes this the B wave. Wait, A ends actually right here. This is a fifth, this is a truncated fifth, and then it's A, B, and C. And then we get the final wave of C at the higher degree. All right, so this really needs to be the end of wave 2 right here. This is 1, 2, 1, 2, 3, 4, 5, 4, 5. Yep. All right, so that was pretty easy to establish. And I think at the cycle degree, I am using lowercase letters for my corrective waves, A, B, and C. And what I was getting at before is that wave A actually ends right here, and at the smaller wave degree, which after cycle comes primary, and I believe that is going to be a capital with a circle around it. And I'm going to color this one white as it's below yellow here, going between those 2 degrees, duplicate down A, and then this becomes wave B. Wave B is 3 waves. And you can even see that this is a B wave through here. It got 3 little waves going in, forming that primary degree, duplicating it, pulling it up, and marking wave C. Very nice. A, B, and C, ending cycle wave 2. Very nicely done, very nicely done. And there's not really like a pennant through here. We don't have the 5 touch points, which is how we know that it's some sort of flat. It's not really like an extension of anything. We're gonna call it wave 2. It looks pretty good. I think I want to also just measure its characteristics. Do I have my book? I should have grabbed my book first, and of course I didn't. Let me see if I can grab it. Here we go, here we go, here we go. Oh, I lost the cat. Come back, cat. She's gonna whine to get out now, and that's gonna be annoying, but whatever. Let's see, wave 2 typically is 0.618 of 1. So there's about 30% of the initial rally left after wave 2, which is like pretty scary because that feels bad watching the stock drop that much. I'm gonna go through here. I'm gonna take a Fibonacci retracement tool, pull it up, and that's upside down. So it needs to be the other way. To start at the top and drag down. And then I want to, is that what I did the first time? No way. We're gonna mark the 38.2 retracement. Really? So this was an exponential move, wasn't it? From 34 cents to $5. That's why. That's a big move. That's not really going to follow our tendencies, is it? Which means that impulse 1 looks like 3 waves, doesn't it? Let's have a look at it. Let's analyze this because it's possible that we are looking at something similar in the markets where it's like, oh yeah, you're having a good time going up, aren't you? Yep. This could be like an impulse, a wave B, and then maybe there is some sort of rising diagonal through here, but there aren't enough touch points, right? Kind of a weird wave. Kind of a weird wave through here. I'm not sure what to do with this. It's got to be a C wave, and maybe it's just composed of a measured move up. Let's do an extension tool through here. Is it going to work from $1.39 to 5? I don't know. We're gonna give it a go though. We're gonna take the initial impulse, pull down. Yeah, it falls right in between 100% and the 161.8 extension from there, which to me is a pretty good indication that, yeah, this is an ABC wave through here. And on what degree? Let's see here. At the cycle degree, we've had this correction, right? And so this is part of wave 1 impulse. I'm curious though, see how wave 1 is actually 3 waves through here? It's so annoying. That means that it's possible we can go 1, 2, 3, A, B, C, and make this wave 5. That would work, right? 1, 2, 3, A, B, C, 5. We get a big wave 4 through here. And then we see this last motive wave come up. So we can make that a 5-wave count and follow all the rules. Because wave 1 can't be overlapped. Check. Wave 3 can't be the shortest wave. Check. Wave 4 doesn't go back to 1. Check. And then 5 just is a simple push higher. It does push beyond wave 3, so it's not technically truncated. And then we get this weird corrective wave through here where we'd have A, B, and then C. Price pushes out higher. And it just has that look to it. Doesn't it have that look to it? Typically, when you see a rising diagonal like this, what we're really looking for is wave C or wave 5 to show that, like at the end of a trend. We want finger motion update. Thanks. Okay. We'll go have a look at that. Let's just wrap this idea up here that this is duplicating this. 1, 2, 3. This is probably 3 up here because we got 1, 2, 3, 4, 5. Yep. So we're gonna call this 3. We're probably working on wave 4, which right now is pretty big. Whoops. Control Z, duplicate. We're looking to finish wave 4. And it's going to perhaps be one of those instances where it does not pass the beginning of the corrective wave A. We'll zoom in here. And this is kind of how far I have to zoom out to understand where we're at on a shorter time frame, because it all has to be congruent. Okay, there we go. I don't know. That looks good, right? I think that looks fantastic. When I zoom in then to a 3-year daily chart and I look at this little pattern up here, it's not, I don't know, head and shoulder doesn't feel right because this is definitely channeling, right? Look at the channel, pretty strong. And that's C at a smaller degree. And so we're going to just annotate that really quickly as well. We'll do it like this. And give it the right color coding so I don't get too confused, because when you go from, it looks like the capital letters a cycle degree higher than the lowercase letter, but that's actually not the case here. Confusing, right? We're gonna go ahead and just do another target from the beginning of this C wave, 1, 2, 3. So it's possible that we're actually looking at an extension of wave 3 within this corrective push, and that's what's giving us this massive rally. It's just insane. It just keeps going and going, right? So this is probably 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, and then we'll get 4 breaks. I expect 4 to break this channel of this C wave. And so this C wave at the primary degree is composed of intermediate waves. Go ahead and just draw what that would, or put that on the charts as well. That would be this guy right here. My goodness, this cat is pushing my mic around. This is what she does until she settles down. It might take her 20 minutes. At any rate, 2 is a sharp, so 4 actually is characteristically going to be sideways. And is this our first, like that? This is a 3-wave motion, tells me that we're probably completing the extensions, and then we haven't even started our downtrend yet. If I had to take a wild guess, you know, you could see something like this, and wave 4 comes out here somewhere. It's a topping out process. It's gonna take a while, especially to fill the gaps. Let's go take a look at where the gap is. Yeah, gap's way down here. Way down here. We need to find wave 2 of the wave that extended. 1, 2, like really 4 could come super low. This could be one of those instances too where we get a big drop. Big drop, but I don't know. Okay, let's wrap up that on NVIDIA for the moment. I'll get into that in more detail. It's not like I don't have time after all. I certainly have time. FNGR, let's go. FNGR. There you go. Here we are. Let's have a look. I remember this chart. I was saying that it's inherently trendless because the IPO is basically where the price is now. So we've had impulses, but they've been rather small. It looks like just like in threes, A, B, C, A, B, C, A, B, C. We're coming to the top of the C wave here. And this one is definitely a sharp. This one's definitely a flat. So maybe we get another sharp going down just to keep that alternation going. It looks like we had a pretty red day yesterday, closing low. Price is now coming back up and testing that 494 level. Volume on the day is pretty good. We still have a couple hours of trading. Implied volatility is low. RSI is, of course, coming up a little bit because price is higher than it closed yesterday. Still not looking overly bullish, though, but it is helpful to see it turn up at or near 50. We're going to zoom into the hourly time frame here and turn on a line chart. This is going to give us a better idea. Okay, let's have a look. I put some sort of pennant shape through here. This is on what time frame was that? I don't know. Was it the 4 hour maybe? Yeah, it was the 4 hour. Kind of a weird time frame to do that. We're gonna make that a little better. We've got some more price data now, and so that's gonna help us make a better analysis too. And I think what I want to do actually is bring this back and then pull this down. That's not a very good triangle, is it? It's really not. A, B, and C. But this wave comes above here, so maybe this is A, B, C, very short C wave there, and then 1, A, B, C, and we're looking at wave 3 building out now, pushing lower in a motive trend. Let's just do a trend line study here, and that's going to give us a better idea of where our motive waves are. I mean, it just looks pretty clear, right? What's going on? Like at the hourly time frame, I'm just going to take the peak to this valley, take it up here. Boom. 468 is the target. Target reached. Prices now, of course, bouncing there, and we'll see if we get what would be wave 5 in the lower push, and this is where we'd be developing that bullish divergence, I think. Definitely. I'm going to go ahead and start labeling this. I think below these waves, I want to get 3 more waves. So I'm going to start at like minor, I think is a good place to start. Minor wave A. Minor wave B. And minor wave C. Target reached. Okay. And the thing is how can we tell if wave C is actually going to extend to 361? We're going to break this down a little bit more, and we'll get into this. We got bearish confirmation, it looks like. That's probably a 15-minute dip. Yep, that's the 15-minute dip. Okay. Okay, Kat. You push my mic all over the place. You're being annoying. She's drooling all over. She's a drooler. She's a drooler. Lay down. Please. She's like, whatever, Dad, pet me. Okay, we're going to zoom into the 15-minute time frame. We're going to start breaking down this C wave. It looks like we're going through an extension, but we're going to check that. On the 15-minute time frame, you can see that these extremes are a little bigger, and maybe this even gives us a better, look at this, more precise level, 450 on the nose almost. Let's fix this 1 point, this dip at minor wave A. There we go. I'm going to pull this down. B. And C. I mean, it looks good, right? The thing is I see the potential for, and on a smaller degree from minor, we go to the minutes. I'm going to do this. Minute wave 1 right here. Edit this. Color this appropriately. And I want to zoom in on this. That's kind of curious. Wave 1. What's wave 1 look like? 1, 2, 3, 4. 1 probably ends out here. And then we get corrective wave 2 starts for A, B, and C. So this is a weird one too. We'll duplicate this and we'll label our corrective waves through here. Why not? A, duplicate, B, and we'll put wave C up here. That was, woof. Yeah, the thing about wave C is that it can be an explosive rally. This, like, look at this wave C. It's just like, and this is kind of my observation in the market, is that wave C is sometimes the strongest wave in a trend. It's just ridiculously strong, and it's going to make a lot of people feel really bullish. But unless you get past the initial impulse, the start of the initial impulse, wave 1, then you're going to be toast. It's not going to feel good. I'm going to do a check really quick to make sure that wave 1 there follows all the rules. So take initial impulse. Ooh, do you see this? Okay, but if this is wave 5, it's much shorter than wave 3. So it's okay that's less than 100% of wave 1. It's a funny looking wave, it is. And that's kind of how what we have to do is look at it as with a little understanding, because we have this very choppy action through here. And for an A wave to do this, it's just annoying, really. Is there some sort of triangle through here? It really just looks like a little channel, doesn't it? Very weird. Like, what do you do when you have this many, like when price overlaps this much, it's really hard to call it a motive wave. It really is. If we zoom out a little bit, it might be a little cleaner or look a little better. Yeah, and here it turns this A wave into 3, which is fine. 3, 3. So we got 3, 3, 3, 5 pushing down. Yep, that's a big push down. Big corrective wave. So I'm okay calling this 1, 2, and we're heading into 3. Let me just duplicate this, put this up here, and be like, those corrective waves complete this wave. And then wave 3 is pushing lower for 1, 2. We're gonna start another. We're starting an extension count. 1, 2. Jeez. 1, 2, 3, 4, 5, 4, 5, 4, 5. Okay, there we go. I think this is the bottom of wave 3 at the minute degree. And now I'm gonna break down each of those extensions that I just counted, and then we'll go back and we'll double check them to make sure they follow the rules. The first set of 3 that we extended would be at the minuet level, which would be labeled like this. And I'm going to duplicate it. We're going to say this is that wave 2 of that same degree. And then we start extending wave 3, which I think ends down here. There we go. And then wave 4 pulls up. And we get wave 5 afterwards, which completes wave the wave 5 at the minute degree. I'm sorry, it's like confusing sometimes. There we go. 1, 2, and then 3, 4, 5. Excellent. And now for the sub-minuet waves, which extended this minuet wave. So 1, 2, and then here we go. This is where we have to pay really close attention, because waves 3 and 4, or waves 1 and 4 can't overlap. And here we actually see that happen right here. See, that breaks the count, right? Oh, no, it doesn't. We just go duplicate. 1, 2, 3, 4, 5. Oh, there it is. Okay. Oh, so this, wait, no, that doesn't help at all, because that still makes wave 3. Ew. So maybe we actually have 1, 2. It has to be 2, and then 1, 2, 3, 4. There we go. Sometimes it helps to just find the waves that don't overlap. You see how this peak does not pass into the bounce here. So we can call this 4, 5, and we can forget about this other count. We don't need to worry about it. And it doesn't even matter where we put the end of wave 1. If it's here and there, or if we don't like how short that looks, we can say it's here. I'll zoom into the 15-minute time frame. At this wave degree, that makes sense to do that. Maybe this is just, yeah, impulse 1, and then A, B, and C. And then 1, 2, 1. And then it starts doing that weird thing again. Man, when price overlaps a lot, it gets tricky. It gets very tricky. 1, 2, 3. This could be, yeah, then this could be 3. And this could be 4. And that could be 5. Impulse 1 ends up here. 1, 2, 3. Can this be 4 right here? No, because those two overlap, don't they? What's that close at? That close is at 550, and this close is at 561. That's actually working. That works. But it doesn't look right. What? What is this close right here? Closing at 557. There we go. Closing at 557, and this one's closing at 559. So 2-cent overlap there. So it's got to be 1, 2, and then we start wave 3. And wave 3 has to be 1, 2, and then 1, 2, 3, 4. Perfect. This peak does not pass this valley. 5. Okay, and that's bottom of 3. That works. That works. And we get the RSI peaking out at the end of this motive wave, and at the end of, well, not quite reaching oversold there. Maybe if we turn up the time frame, it'll make more sense again. Coming down, 3 hits there, 5. And between waves 3 and 5, we get bullish divergence. That's what we're always looking for. Always looking for those sorts of patterns to appear. We're very familiar with this. Gonna turn this green. And then we're going to pull this up, and we're going to show that divergence where the RSI sits a higher low against the lower low in the price. Beautiful. Very nice. 3, 4, and I guess we could put 5 over here. It's not that big of a deal. It makes more sense after all. And what wave was that? Was that wave 3? Yep. And so now we're looking for wave 4 at the minute degree. Up through here. And we're going to check for signs of alternation in retracements so that we can try to get an understanding. It looks like wave 2 here was a sharp. Wave 4 should alternate into a sideways. And then we're looking for wave 5 to be of similar amplitude to wave 1, which I'm going to do by just dropping a line down like this. 11% it looks like. If we take that from the peak that we're currently at towards there, that gives us around 418. We're going to do an extension here and see what that tells us. Not enough. That third wave extension was brutal. Coming through here, extending at the minuet degree, giving us that push below 494. I don't think we're going to extend here. I don't. It looks like we're in wave 4, which is a sideways correction. And what that may mean is that we're done and we're just going to look for a push down now. And on a higher time frame, we're going to be looking for that bullish divergence to mark the end of that correction. Unless we're going to keep going down, of course. We'll still need to finish the impulse down. And then we'll correct sideways if we are going to see more downside. If this is the end of that uptrend, then that's what that's going to look like. Looking at the hourly again here, I'm going to draw this uptrend. We're going to take it between these 2 points, like way over here. Because I think this is the beginning of our impulse. I mean, this really could be the start of the impulse. This could be 1, 2, and then we start our third wave extensions. The clues here being the matching alternating, or the matching corrective waves. So we'll be talking about 1, 2, and then 1, 2, 1, 2, 3. This can't be 4, which means that there's some sort of pattern through here. Always so complicated. It can never be easy. Let's go ahead and just extend this to the right. What's that look like? It's way out there. But this is the trend line we're going to be watching the most closely. Crossing below that is definitely bearish reversal. And maybe really this is all wave 3 through here. 1, 2, 1, 2, 3, 4, 5, 4, 5. Yes. That way we get these matching corrective waves, and it's not an issue. Our principle of alternating waves makes sense, right? We can label this now, I suppose. It looks like, let's try it again. 1, 2, 1, 2, 1, 2, 3. No, 1, 2. This has to be 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 4, 5. Okay. 1, 2. So wave 4 at this degree needs to be flat. We're getting this could extend again. Looking at this, it could extend again. And the reason why I say that is because once again, we have a couple of matching corrective trends. This is a sharp. This is a sharp. We had a couple of matching flats. Now we have matching sharps. We could fractal again here, heading higher. Whew. Interesting stuff. Interesting stuff. In which case, I kind of want to be looking for bullish reversal and bullish continuation. And I think that really happens when price, well, first thing, of course, is going to be breaking this downtrend through here. And we'll be looking for a bullish pattern. Maybe we get, maybe this is it. This is A, B, and C, and we're done. And then 5 comes down here. It truncates. It sets this bullish divergence. And then we just keep climbing. So keep an eye on that in FNGR. Going to have to come back to that one in a little bit. I want to go look at BBIG because I haven't seen BBIG today. We're going to go ahead and delete this. And zoom in on the 15-minute time frame. See what we got. Yesterday, I was talking about how the price would probably come up, back up to this trend line, and then break back down, and it did, and it has, and we're setting a new low. That happened today. Looks like in the first hour after open. This is a bearish thing because what it does is it confirms a new downtrend. We'll be looking at this in an impulse and this three-wave form as corrective. So this could be 1, A, B, and C, and this could be starting the next wave, the third wave extension for 1, and then we're looking for A, B, and C. Looking for that third wave to extend, and if that's the case, we're going to take this, and it's important to know how to do this. Take the impulse, use the measure tool off of the impulses. That 265 level came in pretty heavy as resistance, it looks like. If price fails to pass 265, then you can see that we have a couple of targets here that are pretty close together. That's because this is an initial impulse as well, right? So you have impulse, correction, and this correction went higher than that. We want to take it to the top of that correction. You can see that the 257 level then becomes support, right? A, B, C, A, B, C, back-to-back threes. We turn that into 1, 2, and we now want to follow this extension tool. Pull this over here, and we'll just speculate that we're going to reject this level and head lower. And what we're going to be looking for at that point is a new channel that will define that third wave. Wave 3 typically gets its own channel. You can see how the cat is messing my mic up here pretty badly. Looks to be getting a silver cross on the weekly. Zach Young, I tried to give him some hopium that it might extend to wave 5 in the $8 range. Could take some time. I mean, it could, yeah. Is that, you're talking about BBIG right now? I think so. Or finger? I don't think I was keeping the chat scrolling, which wasn't great. But yeah. Yeah, FNGR could extend again. I see that. And the $8, let's go back to FNGR for just a moment. Let's just do that. Let's go. If FNGR daily, go to daily, extends again, 1, 2, 1, 2, then yeah, we're gonna use this extension through here. This is the one. Then yeah, 750. Yeah, 750. 750 if we get the next extension on FNGR. Yeah, I totally see that. Let's go to BBIG again, and I'm just like looking at this. I'm like, we're probably going down. We're probably going to form this channel, and I can't know that this is where the channel is going to form, but I'm going to leave it here anyway. It's kind of speculative, but a big push down is expected. It's going to be set by whatever high we get today, obviously. And we're going to be looking for a new low to confirm that, and that's going to be this low at 253. We haven't really gotten a strong motive push. You can see that this impulse was not completely retraced, and then we had another impulse which wasn't completely retraced, and now we've had another impulse which hasn't been totally retraced. So how many is that? 1, 2. So we counted 1, 2, 1, 1, 2, 1, 2, 1, 2. So we have 3 motive waves right now stacked up, and they're pointing down. And for each of those motive waves to finish, we need waves 3, 4, and 5. So we're going to get 3 wave 3s pointing down before we get a correction or a bounce, theoretically, if that's the correct way to count this. Otherwise, we're looking at ABC patterns, right? We could have ABC, ABC, and we get 2 sets of 3 back to back. But if they're oriented in this direction, then I'm looking for a 3-3-5 pattern where we then still get that motive wave pushing lower, and we'll see it push far below the retracements of the back-to-back ABC waves. In which case, 227 I think is definitely the right target. It's just a question of how we get there and how long it takes to get there. Let's turn on the candles because I see the price is finding some resistance at 265. Yep, these are big levels. These are big levels. They really are. I'm going to drop down a bearish continuation here on the close of that low, not the tail. Bearish reversal. We're going to color it red. It's not really reversal. It's continuation at this point. Continuation. Okay. There we go. This is what I'm expecting. And let's see. Since this is kind of like a sharp wave up, I would expect the next correction to be flat, and then like we'd probably get like a flag, something like this. Again, just guessing here. Ooh, yeah, that gives us to the extension, maybe even to the 221 support. That's what I think we're looking at. I know everyone got excited about BBIG, and I'm like, don't worry, I'm here to tell you otherwise. Yep. Okay, there we go. That's where I'm at with BBIG. And looking at this too a little differently, let's put the drawing board on. Is it possible that we're getting some sort of triangle forming through here? A diagonal of some sort? 1, 2, 3, 4, 5. If this is, then we could be looking at a leading diagonal triangle in wave A. Not ready to say that though, but I'll be keeping an eye on it. Absolutely. You're talking about FNGR. Cool. No, that's cool. That's what I thought. I figured as much. I was just like behind the chats. We're good. Okay. So how about we take a peek at AMC? I was tweeting today that we've made a breakout of this triangle, which is a big deal. Really, it is, because if it is what I think it is, then it's prepping. The price is prepping to like drop, and pretty harshly, down to about 356. I think the big risk here for AMC is that the market overall goes risk off. I think there's a very strong chance of that. I've been hinting at an economic slowdown in China that could impact global markets, and Russia pulling out of the grain deal is actually really bad for China. That's where a lot of their experts go. So I've heard. I need to fact check that. Someone else can fact check that for me. But this is what I'm getting at, is a lot of developing nations need the grain from Russia, which Russia is now saying they won't supply. And this is bad for China because they've been the leader of the developing world. This overall politically will have repercussions. There will be a response. I'm not sure what it is. This could be the very slow turn in the global economy. The United States economy obviously rebounded out of COVID, no problem, and is doing amazing. However, the whole world hasn't been so fortunate, and again, unfortunately, the globalization of the economies has now made us all somewhat interdependent. I remember in 2008 when the financial crisis happened. Financial crisis happened everywhere. It was like, oh my goodness. At any rate, we're all tied together now. We're all in this together. Why can't we just get along? At any rate, if this turns the markets in the United States into a risk-off scenario, AMC is definitely a high-risk play. I know that there's a lot of attitude that it's like the safest thing you could do. And I just kind of like shake my head like, whatever. It's following the analysis, and the analysis is still bearish. Pushing down below 427 is not very good for the bullish scenario. It's really not. It gives us this perfect triangle through which I expect to find another impulse in a C wave at the minute degree I'm showing, which is 356. And on the extension, 263. Whoa. Yeah, that $2 targets start to come back in. And at around $2, if we hit this 222, I'll buy back in. Like, this is where Cap's going to re-enter. Right here. Cap re-enters. Here. There it is. Yep. Boom. That's where I do it. Make some profit, bro. I want to see. I don't really trade that much. The only thing I'm trading right now is Playboy, and I'm just holding shares long at this point. PLBY. Moving through. This is let me get a better drawing going. I think on the drawing board and on the daily time frame, this is the simplest way to put it, is that we're going to reverse out of this triangle, which is always awkward because triangles are supposed to be continuation patterns, which they are, but here I'm thinking a little differently, that this is actually going to be some sort of well, you know, I don't know if the Frost and Pretcher in their book go into reversals out of triangles. You know, sometimes it's possible you get internal trend lines that form, and they can give you these shapes, but they aren't necessarily the same composition. Like, these triangles all have a specific waveform analysis between opposing trendline touches. Yeah, we could be looking at some sort of flat through here, like a flat correction that serves as a reversal, like a double or triple three. And you can kind of see that, right? 1, 2, 3. This could be 1, 2, 3. And we could be starting 1, 2, 1, or 1, 2, 3, 1, A, B, C for 2, 3, truncating. I don't know. It's tricky. It's tricky. We should go look at Blakowski's website. This is Think or Swim. It's TD Ameritrade's desktop application. It's really great. I like it. Right now, I'm going to go over here, and we're going to go look at the patternsite.com. We're going to look at chart patterns. We're going to see if Blakowski has anything on like reversal triangles. This is weird. Let's see here. Tails, 10 baggers, 3 falling peaks, 3 peaks, domed house, 3 trading mistakes, third wave extension, throwbacks, time performance, trend change, trend lines, triangle ascending, triangle descending, triangle ascending, Elliott wave. I just want like a generic triangle. Leading diagonal, triangle reverse, symmetrical, broadening, triangle running, triangle symmetrical. Here you go. Busted symmetrical, monthly, triangle symmetrical, Elliott wave. Let's go to triangle symmetrical because that's what we're really looking at. He says symmetrical triangles, sometimes called coils, often appear on the historical price chart, but performance is awful. Great. Overall performance is 36 out of 39. Yeah, not a very high performer. We get our characteristics through here. Upward breakout 60% of the time and 74% of the way of the triangle apex generally. This is what we're looking at. He doesn't really give us a whole lot here. I would like to see an example of one that's like serving as a bottom, because not very many bottoming patterns appear in a triangle like that, right? Which is what I'm looking at right here. So very possible I'll have to look at this in some other context, but it does appear to be like we're getting ready to push up and out. I would doubt that we get a downward breakout. We've basically got bullish there's like a quadruple bullish divergence through here. Look at this thing. Sets low, 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 low. But it's like, actually, we're going up. And then we didn't get then we got this corrective impulse heading higher, but now we're in another triangle. That's kind of where I'm at, is got this guy. So we had these bullish divergences show up, and then the corrective push up was here. We went from 143 to 193, which percentage-wise is very generous. We're looking at 34%. Nice. We then retraced, okay? And now we're bouncing around in a triangle, which easily makes me think that this could be wave A and this could be wave B. We're going to go into a cleaner chart. We'll go back to the intraday. Oh, hey, look at that. Yeah, so I've done some charting here, it looks like. I'm going to clean it up and get rid of this, get rid of that. Okay, target reached, great. Over here, divergences, whatever. Get rid of this, okay. Yeah, so you can see I had bullish breakout at 171, and then price ran to 192. And then on the flip side, I had 166 as bearish reversal, and price fell to 147. Get rid of that. Support and resistance at 178. Yes, that's a critical level of resistance. You can see that the price through this pattern is typically on the low side. And if I'm going to be calling this an impulse, this is going to be the top of A right here. 1, 2, 3. This gives us our first touch point. A, B, C, no, C, D down here. And E will be to the upside. That's where I want it. We're going to clean this up too, make this a little cleaner. We'll go to the hourly time frame. Just take out some of that price data. Get it a little easier to look at. Are you trading in crypto or stocks? I'm not trading any crypto. I think I'm holding some BAT and Ethereum, and I think I have that Ethereum staked. It's like Ethereum 2 or something like that. Hey, David Sod says SPY filled the overnight gap on the upside. There are gaps below that could be in play. Yes, there are. Let me get off of Playboy really quick. I'm just gonna finish this thought. Basically, I'm saying that we could very easily be in a triangle through here, and it could be a horizontal or an ascending triangle like this. There we go. And I'm going to go ahead and just draw this as an impulse, take the extension down. If we do this, our target for the C wave is really 228, right? So that's why I'm pretty bullish here, is because I think we had that divergence, corrective impulse, and this is the second wave. Wave B and wave C will push us higher, and eventually we'll turn that into a motive wave count. Let's go look at SPY. Go into the daily time frame. We'll turn on the candlesticks so we see the gaps. Okay, yes, there was a gap up yesterday, got the gap fill, and then today we opened lower, gap, and then we closed that gap. Wow, this is gonna look wicked on the minute chart, isn't it? Okay, so you can definitely tell where after hours is. You just follow the broken price data. Whoosh doosh. This is why I don't trade SPY anymore. This is ridiculous. Like, can you imagine being bullish at open? Pre-market was going up, and then let's see here, 6:30. Where's 6:30? This is Pacific time, mind you. So the market opens and price starts pushing up all of a sudden, and then it just reverses, and you get just this nasty sell-off. Oof. We pushed several strikes down. That would have been a great day trade. Would have been a great day trade. And look at the RSI here, just constantly hitting oversold over and over again. Price bounces, grinds sideways. And then it makes another big dump. Wow, look at this. Doosh, doosh, doosh. This looks like a wave extension to me. It really does. If we're counting the top of a motive wave through here, that should show up on the hourly time frame too, right there. That should. It's going to look a lot better on line chart. Too much overlapping price data there. Do you see how much cleaner that looks? Like, how on earth would I be able to do this as easily from the candlestick chart? Right? I mean, I guess I could. It just gets hard when you get all this overlapping price bars. Don't bother with it. Take it out. Oh, that looks way better. That looks way better. So we're looking for A, B, and C to start. We've got 100% target reached. And this would have been an easy thing to forecast too. We have this downtrend break right there. Turn on our red dots. There we go. Then we have this uptrend, which of course broke. And now we're starting probably the extended three-wave from right there, then to that correction. Ooh, yeah. See, there's the extension. This is what I'm talking about. Right there. So we have this initial impulse pushing down off of the end of this corrective wave. We're going to zoom in to the 15 minutes so we get some hits of the RSI that overbought and oversold. This is good. Okay. And then we're also going to clean this up too, because now nothing is actually where it should be. All right. And pulling this down, and pulling this up, and then pulling this one up too, and then pulling it down, and then pulling this one up. Oh, look at that. Those two match on the penny now. That's two different Fibonacci tool extensions lining up perfectly at 452.64. That's great. SPLK, if you have time. These are great. Yeah, SPLK, no problem. We'll definitely get there. Let me wrap up this thought on SPY. I'm just going to start counting. I'm just going to start a count. What? Not on this chart, though. Nope, we're going to take out a different chart. Okay, whatever. Actually, blank is probably not actually blank. But this is probably going to be waves 1 and 2, and we're in a third wave extension, which I won't label because I'm at the sub-menu wet degree already, just writing really quickly. 1, 2, and then this third wave extended. 4 is going to be a sharp probably. We're going to do this. Do this one more time. I like it there. I'm sure if I pull it down to here, I get like, it's not as clean. I like this because I think this is the bottom of wave B. This is A, B, and then C. And now we're looking into wave 3. And wave 3 here is, yeah, going down to 451. And then we'll sharp up, and then we'll come down again. And so we'll take the bigger push down, 1, 2, and see where this extension target is. And it's 451. Okay, looking at the RSI, am I getting a 3-5 bearish or bullish divergence here? I guess kind of a little bit. This kind of more looks like the divergence you get where you're just going to be like grinding through oversold for a while. I like this. 1, 2, duplicate down, bring this down. And then this is 1, 2, 3, 4. Yeah, 5 comes down probably here. I like it. I like it a lot. And then we'll be looking for the bounce, duplicate, and that can't just pass the bottom of wave 1 here, right? So this is this becomes a bullish reversal level actually then. And that's how I do that. I use that initial impulse. Bullish reversal. Yep. Because what that does is that breaks the motive wave count heading down. The motive wave count heading down expressing the downtrend that would be continuing. So we can do 3, max 4 retrace way up here. But honestly, it's probably going to be like right where we're at right now. And then wave 5 may truncate. And then we'll come up here and we'll correct. And we'll probably pass the 453 in the correction. Because this will be wave A, and then we'll get wave B, and then wave C will push lower. That makes sense to me. And then I'll, you know, label that when the time comes. I have it coiling in an ascending triangle, looking to break the neckline of macro inverse head and shoulder pattern. Macro inverse head and shoulder pattern. Oh, you're talking about this big one right here, where we're calling these 2 shoulders. This is the head. Like here's our neckline. Right there. We can do the extension tool here. We take the height of that and we apply it to the breakout price over here-ish. Okay, that's close enough. And we get 457. That's the target for the inverted head and shoulder target, right? And price, I think, has pretty much hit that, has it not? Let's just double triple check and make sure. 450, let's see. I need to zoom in again. Look at this. For high of 456.43. Yeah, so, you know, we've hit this inverted head and shoulder target already. Yup. Ascending triangle. I don't know if we have the touch points for an ascending triangle through here. But yeah, you know, we've definitely had a bottom and a corrective wave heading higher. Absolutely. Looking to make a longer wave corrective form here, I think. SPLK. Oh, SPX. Okay, well, let's go to SPLK. SPLK. What's Splunk Inc? I don't know anything about Splunk Inc. Oh, well, yeah, we have a head shoulder through here too. I can see that. Call that the neckline. Let's do this. Yeah, that works. What we're really looking for here is to make sure our shoulders have are at a similar price level. They don't have to be like at exactly the same level, but this is pretty close. We have one low here, which is good. Wow, look at this. Douche, 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 douche. Is this 1, 2, 3, 4, 5 truncated? And then 1, 2, 3, 4, 5, where we have an overlap in waves 4 and 1, which is okay if we're moving through some sort of triangle, but we're not. Interesting. Interesting. I have to look at that a little more carefully. But let's go ahead and just do our head and shoulder analysis here. We take the height, and then we take the height, and we apply it to the breakout price. So if we get that confirmation breakout, then 148 is the target here. That's a huge rally, right? And at this point, we're going to be calling this peak bullish confirmation. And we'll put it into green. Bearish reversal here. It's difficult. I do see the ascending triangle though. Yeah, that's really clear. Let's take off of the head and shoulder stuff, and we'll oh, I think this is it. Extend to the left. That's probably the price level you're using for your ascending triangle. That makes sense. Yep, that makes a lot of sense. And then we're gonna do this guy right here. Nice. Okay. Let's do the chart pattern analysis here. Let's go to Bulkowski's website, and we'll go to the index here. Go down to triangles, and we'll do the triangle ascending. Not busted though. Triangles ascending. All right, what does Bulkowski say? He says it's a decent performer after an upward breakout, but suffers from a suffers after a downtrend breakout. Oh, okay. So if we're coming out of a downtrend, then we're gonna have some issues, right? So let's just take a peek here. We definitely came out of a downtrend. Definitely came out of a downtrend. So we'll see what Bulkowski says. Overall performance rank, 16 out of 39, where 1 is best. Break-even failure rate of average percentage being price target right here. 70, wow, 70%. That's pretty good. We're going to take this. We're just going to copy it, put it onto the chart. Oops, not the right one. There we go. And click, 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 There you go. And I don't like it that it's always in yellow by default. There we go. And so what I can do here and do it quickly is take the low to the high, and then I'll just be like, that's going to be our breakout price, supposedly. And then what I want to do is use the extension tool to calculate the price target. Ha! Ha! That's smart, right? Boom! There you go. So if we get an upward breakout, target's 138.52. I mean, that's a substantial rally, right? Like 32%. Not bad. Not bad at all. And we can't... This is good that we actually have a corrective trend here before we come up. And this would be our first touch point back here. 1, 2, 3, 4. Yeah. Fifth touch points right now. And so what we're going to be looking for is a push higher. 1, 2, 3, 4, 1, 2. Ooh, and then there's some sort of transverse broadening pattern through here. That's interesting. 1, 2, 1, 2, 3, 4, 5, 4, 5. A, B, C. This is, yeah, this is gonna be okay. I think this will push higher. Might just be like 1, 2, 3. And then we're looking at wave B through here. Maybe this is 3, A, B, C, and this could be 1, A, B, C, A, B, C, and this could be a retracement. This is interesting. We'll have to zoom in on the hourly time frame to figure out what's going on here. Very possible, though, to see an upward breakout. Let's go back to the patternsight.com and just make sure everything looks good. Price trend, any direction prior, triangular, two converging trend lines. Yeah, okay. Crossing, price must cross the pattern from side to side, filling the triangle with price movement, not empty space. Price must touch one trend line at least 3 times, the other at least twice, forming distinct valleys and peaks. Volume trends downward 78% of the time. And we get a 63% chance of upward breakout, and 64% of the way to the triangle apex. I like that. I'm gonna copy this too. We'll put that in there. I don't even know what this company does. What is this? Maybe somebody can like drop some things in the chat about it. David Sod, live link shared on Twitter and the Discord. No problem, dude. Anytime. Really appreciate your support. I really do. Been doing this for a long time, and I know that, you know, some of you have been here for like the whole time, and that's super cool. I'm like blown away. It's like, yeah, like really it does encourage me. It really is very encouraging. And I appreciate it a ton. Let's go ahead and add some of this data here. Upward breakout, 63% of the way to the triangle apex. So we're going to finish the chart drawing. There we go. And we're going to then use, let's use Fibonacci time ratios. Does that work? Yes. And you can see that I've already got it at 64 and 74%. This is the reason why, is because I use it to measure the breakout timing. So there you go. 64% of the time comes to August 17th. Maybe another month until we get that breakout. So it's very possible we get a little ascending triangle in here actually before we see the move higher. Possible. Zooming into the hourly time frame. Does that make sense? Yes. 1, 2, 3, 4, 5. A, B, C. Yes. Now it's starting to make more sense because that's the corrective horizontal triangle in this impulse. Okay. And this target probably won't be reached, right? Yeah, it's at 119.71. We'll definitely get there with its extension if we hit the ascending triangle target at 70% at 138.52. Okay, what happens is we get this impulse pushing up and we smack into that resistance at 110. Price rejects, falls down. This is definitely A. This is definitely B. Yeah. See, now it's all coming together. Cron GIF. A. This is B. C comes down to 101. This is going to be some sort of flat through here. Looking good, looking good. So 1. Wave 2 rarely forms a horizontal triangle. Rarely forms. It could be the case. 1, 2, 1, 2. Again, if we're counting 1, 2, 1, 2, and we're looking for a bullish extension higher. In a triangle, we're looking for A, B, and C. We didn't get the C wave. If we did call this C, we'd have to call this A, B, and C again. But we're starting to make progress now, right? but we're not quite doing that because we have broken an uptrend. Let's see. This trend is the most important trend, but this is really the, well, yeah, we're just starting to break that one. I would reckon this is 1, 2, 3, 4, 5, A, B, C. And this is the B wave right here. And then we'll be looking for that upward breakout from the triangle to reach that target. I mean, it makes sense. It makes sense to me. It really does. Bearish reversal here doesn't really happen until we break the lower trend line. We could bounce around for a while. Sometimes you get more than 5 touch points, right? That could be the case, but we've only got a month and the price is hovering right around there towards the upper trend line. So given the time frame and the distance to a breakout, yeah, I'd favor this bullishly. I mean, it breaks out upwards 63% of the time, right? I mean, that's not like the best odds, but it's pretty good. It's pretty good. I mean, something to bet on, right? 63%, I'd do it. Okay, let's go to SPX. I told Jeff Joe I'd be doing this. I should just go into the Discord and ping him right now. I'm gonna go ping him at Jeff Joe. Gonna look at SPX right now live. Okay, just in case you're not here, there you go. Let's talk about SPX or XPXU. Did I say SPXU in the thing? SPX. Edit this. I mean, he gets it. He knows just an inverse ETF, but SPXU. Ha. Okay. SPXU. Go. Yes. Okay, so let's review because I had a lot going on here. I said this was a lean diagonal triangle with an overthrow. We fell out of it, pushed higher, and then we got like this big reversal, and we're setting these lower lows as price is rallying in SPY. So we have to start figuring out what was wrong here. And it's probably because I didn't analyze the incoming downtrend. Probably because I didn't do enough analysis. Let's see here. Big downtrend, and I'd have to count all the extensions to really understand where the last push down would be. And it's just kind of a guessing game if I don't do that. And that's kind of where I'm at here. This is very possibly just a wave A, B, and C. I have this labeled A, B, oh, and ooh, well, I have this labeled C here at the super cycle degree. Well, it should be lowercase if it was super cycle. It's actually, let's see. This is minuet, minute, and then I jump to intermediate. Where's the minor wave? Well, I have this labeled as a wave C, so it's possible that this wave makes progress. And it's also possible that it forms a triangle. And it's also possible that triangle be an ending diagonal triangle. Looking at oversold in the RSI through here. This is, I like this. I like seeing this as A, B, and C. Yeah. Oh, here's my minor waves. Oh, these aren't minor waves. They're not the right color. Interesting. That's okay. So this chart's not labeled very well, but I'm going to go through and I'm going to assume this is an A, B, C wave through here, forming a B, because B has 3 waves and they're A, B, and C. And then this is a C wave, so we're looking for a motive wave through here, heading lower. I like that. It could set a new low. Okay, here we go. Let's get a new chart going. Ooh, drawing board. Nice. It's pretty empty. Looks pretty empty to me. Okay. Here we go. Here we go. This will be good. It's gonna be a good time. It's gonna be a good time. Let's start with the big analysis. Let's get these points labeled. All right. And I was calling this wave A, and I had it at this wave degree. Right, A. No, this is B. No, so this is, okay. Okay, hold on. Hold on. This is B at the intermediate degree up here, and that's composed of 3 smaller waves at the minor degree. This is what's wrong with the first chart. And we're gonna make those yellow. Aha! Duplicate. Okay. Because it's C, and then this is a B wave. Yep, 1, 2, 3. Big, just shoots it down. And then we'll duplicate this guy over here and say we had A, which forms in this this triangle through here. A, B, C, and then rips down. And if this triangle analysis is wrong, it's because this motive wave is finishing this countdown. And then we have A, B, and C through here. Let's see here. That Elliott wave count was pretty old. I'm always getting better at this. You know, it's a steep learning curve. It really is. And it takes a lot of analyzing. Like, you gotta analyze a ton of stuff. Look at this. Look at that. Look at that. Almost perfect reach at 100% for A right there. I'm gonna turn off that extension. Perfect. Let's do it to the downside. A, B, and C here. Oh, look at this one. Nice. Beautiful. Beautiful. Love that. Love that. Okay. Let's see here. Let's try this one. Nailed it. Okay, this gives me a lot to work with. So you can see how, just like in retrospect, as long as you know what waveforms you're looking for and you know where to drop the extension tool, that you want the first half of the tool on wave A and the second half on wave B, and then it'll put a target down for the third wave. And that's what I did through here, and you can see it 3 different times. It wasn't like I was guessing, and each time the price is coming within like pennies. It's insane, right? It's insane. So what this does is this establishes A, B, C, A, B, C, A, B, C. Brutal. That is so brutal. So they had 3 sets of 3 waves, and then a brutal push down. Wonder how do we get 3 sets? A, B, C, because they're each 3. I mean, we call this like 1, 2, 3, 4, 5 for motive. This one too, we could call 1, 2, 3, 4, 5. So we could still say these are motive waves through here, like motive, corrective, motive. That this one reached the 100% target tells me it's the reactionary trend to this incoming downtrend that broke. Let's do that. That's important context. It's probably from this one, really, like this thing right there. Interesting stuff, because 1, 2, 3, X. Wow, so this could be like really some sort of reverse triangle, maybe. 1, 2, 3, 1, 5, 4, 5. Wave 4 broke the trend. Wave 5 bottomed, truncated, didn't pass below 12.19. Reactionary trend, double reactionary trend, triple reactionary trend. Boom. So really, A, B, and C, and then 1, 2, 3, 1, 2, 3, and 5. For a 3, 3, 5 double combination. Tricky, 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 tricky. Okay. I got this cat down here. You're being annoying. I know. Okay, now I'm holding a cat. Let's see. I want to check out the potential for some sort of triangle through here. And it looks like that would be a great upper trend line, but it doesn't quite reach all the way back. Maybe like this. And then maybe I connect those two. It just looks channely. Looks like a channely wave C. That's what wave C does, is it channels like a motive wave, because it is a motive wave. And I'm going to take this, and we're just going to leave this downtrend on the chart. If you don't know what SPXU is, this is an inverse ETF of SPY. And so it basically just reflects. It's not perfect, though, and there are divergences between the two. Let's go through and let's start measuring what our impulses may be. 1, 2, 1, 2, 3, 4, 5, 4, 5. And then A, B, and C through there. So this is the bottom of the first impulse. A, B, and C. A. Let's see here. I dropped that in the wrong spot. Let's do this first. Let's say this is 1, 2, 1, 2, 3, 4, 5, 4, 5. A, B, and C. 2 extensions through there. Target's 956. Ouch. And that could be just like wave A, really. Maybe we have a complex measured move down through here. Let's see here. Yeah, that looks pretty good. 1370. What was the low there? 1420. Within 50 cents. That's not bad. Maybe if I zoomed in on a smaller time frame, it would look a little cleaner. Let's give ourselves more than 90 days. Give me a year. I think I need a whole year, right? Whoa. Let's see here. Let's clean this up. Let's go here to here. Magnet, please. Thank you. and pull this down and pull this up, and didn't come quite down. Okay, so I don't want to call that like an ABC move because we didn't get that. Doesn't look like that. 1 2 1 2 3 4 5 4 5. Oh, pull this up. That's the end of that wave there. We have A, B, C, A, B, C, A, B, C. This is a complex correction because, okay, cat. Okay, cat. We get it. You're down there. You want me to pay attention to you. You're being annoying. That's great. Okay. Gonna just twist this way so the cat's not in the microphone so much. Let's see. I think that's the broadening pattern through there. Something like that. That look good? Looks pretty good. Doesn't look bad. I mean, there's a little bit of overthrow here. That's fine. If it's gonna be reversed, that'll happen. That'll happen. But that's the corrective form. And it's possible we have a wave 4 through here and a 5 from one of these extensions. And then we correct higher. I'm not going to be that nitty gritty with it because I don't check on this chart that often anymore. But I think it's pretty safe to say that we've definitely at least had the third wave extension. This is easily 1, 2, 1, 2, 3. Nope, because 4 can't come into 1. So where's the first peak that doesn't come into a prior valley? And it looks like right here. This is going to be one of our wave 4s. Really? Is that 1, 2? 1, 2, and we're starting 3. Yeah. That's what it's going to have to be. Brutal. Brutal. 1, ABC. 3. Motive? Possibly. Possibly. Because triangle? Ooh, see, we don't really get triangles in this wave position, though. So maybe there's something to learn there. If we are having trouble, and we are seeing, I mean, I've seen this before, recently, I want to say, where you get these sharp, like, we're supposed to be in wave B, right? We're supposed to be in a retracement, and we're getting a clear diagonal. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, maybe, or 3, 1, 2, 3. Tough, 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 tough. It's always hard to get the perfect chart going, but I mean, yeah, that looks bearish, right? Like we call that an end diagonal or a rising wedge, which it's in the wrong position for. Anyway, price breaks down out of it. I'm gonna keep an eye on that thing. That's weird. I mean, you see it, you just have to acknowledge it. You really do. Maybe when I zoom out, it'll look a little better. Could be a C wave too, right? It could be A, B, and then that's C. Because remember, at first I was thinking that this motor wave might end back here, and that would work. We'd have A, B coming down, and then C would form this rising wedge. That's the right place for it. And then we get this breakout to the downside, which means this is a corrective wave, obviously, and this is the third wave that's extending. So this is the impulse I want to draw the extension from. That's the extension right there. 889 would be the low. The target being 1176, which we've passed. This would be 1, sideways 2, 3's coming down hard. 4 would be a sharp. 4 would be a sharp. So think zigzag and commonly breaks downtrend. And then 5, commonly truncated. This would support a downturn in SPY for a bit. And then wave 5 would truncate. Or if it doesn't truncate, then we'd get the 889. So this could go on for quite a while. It really could. Let's redraw this as a channel. And let's look at the RSI. And we don't get oversold till right here, which is crazy. This is 1, 2, 1, I think. The third wave extension. All right. And this actually could be like 1, 2, 3, 4. And we're doing wave 5 through here. But we don't have we can have a bullish divergence here, but it's kind of hairy. This is probably because their lows occurring at different Elliott wave degree cycles. Whew. 1, 2, 3, 4, 5, A, B, C. I think it's a complex measured move down, but at the same time, that 728 target's so low. I'm not gonna lie. It looks very bearish, right? But this could be the last impulse in a corrective wave. And that makes sense given SPY is probably also in the last impulse of a corrective wave, right? That's what I've been saying here for a bit now. Let's see here. Zigzag daily. Wow, this is an old chart. Can I get like a good... I mean, okay, this is blank enough. We'll just go from here. So if we have impulse A and then B, right, 447 is that target. And we're there. So the end of this impulse lining up with the end of the impulse in the inverted ETF is good. It makes sense. It really does. And SPY could easily turn around if like Tesla and Apple, you know, the big mega caps that are holding everything up. If there's any slowdown there, then hey, there you go. That would give us a reason to see downturn SPY. So let's go to Tesla. Let's go to Tesla really quickly. Because I was here and I was saying that we would find ourselves topping out above 267. Price dipped down and then pushed back up, which is uncommon. But as it did so, we started definitely getting signs of a topping pattern. And then today, we're looking at just like a brutal sell-off. Let's turn on the minute chart here, see what that looks like. All right, let's zoom in and we'll just be like, happy days, we're bullish on Tesla. Wow, crazy open, setting new highs now. All right, yeah, we're feeling, whoa, okay, it's fine, it'll bounce. I'm buying this dip. I'm gonna buy this dip. Buying calls, yellow win calls. Oh, shoot. Okay, I could get out now if I wanted to, but, you know, whoa, we're opening now. Nastiness, and it just drops and drops and drops. Big bars. The RSI on the minute time frame here coming down to 19.5, pretty low. On the hourly chart, it just looks like it's melting. This is definitely impulse. Definitely impulse. We're going to be starting a new trend very shortly. This is possibly wave 3, 4, and 5, and then we'll get a bounce, and then we'll head lower. I bet you that 279 level is going to be where we're at in terms of resistance. But at this point in time, it's possible that we've actually invalidated a bullish wave count, which means we've hit a bearish reversal. That's probably here at 264. And now we're at 202. Whew, big volume, big selling volume. Yikes. Okay. Well, we're going to go ahead and just assume that we're about to hit support and that we're going to find resistance at 279. All of a sudden, we're targeting a gap zone, which is important to know. I mean, trading gaps are a thing, and yes, they do fill. There's a lot of them here, most notably like way back here from the bottom we found in January of this year. And let's just go ahead and say that there it is. This is the lowest gap we have on Tesla at 114. Polkowski has some information on price gaps. We should go look at that. Let's see here. Price gaps. Gaps are useful for showing support and resistance zones, but as a tradable, by the time you properly identify them, the move is nearly over. If you already own a stock and a chart pattern breaks out in a gap, then hold on for a strong move. Performance improves 2/3 of the time in chart patterns I looked at. Okay. Percentage of upward price gaps closing within a week. Area gaps close 85% of the time within a week. Breakaway gaps, 1%. Continuation gaps, 8%. Exhaustion gaps, 60%. Percentage of downward gaps closing within a week. And this is kind of nice. Gives you a weekly time frame. Area gaps, breakaway gaps, and continuation gaps, exhaustion gaps are different kinds of gaps. We can talk about all of the gaps. It's a gap special. Gaps occur when today's high is below yesterday's low, bearish gap, or today's low is above yesterday's high, bullish gap. Now, area gaps, common pattern gaps. These are synonymous for the same type of gap. Occurs in congestion, trendless markets, and closes quickly, usually in a few days. Volume on the gap day may be high, but returns to normal in a day or two. Few new highs, upward trends, or lows, downward trends, occur after the gap. A distinctive price curl as the gap closes quickly is a clue to this gap type. And I've definitely seen SPY do that. Breakaway gaps starts a new trend, and the gap often occurs on leaving a consolidation area, usually on high volume on the gap day, which can continue for several days. Price trends for several days. We call this a rising window. Continuation, measuring, or runaway gaps. These are synonymous for the same type of gap. Gap occurs during a straight line advance or decline. Price makes new highs or lows without closing the gap. The volume is usually high. Dividend gap, exhaustion gap happens at the end of a trend on high volume. The gap is usually not followed by new highs or lows, and the gap may be unusually tall. After the gap, price consolidates or reverses direction. Commonly occurs after continuation gaps. Exhaustion gaps usually close within a week. And then he's got trading tips here. Median time to close the gap. In this instance, breakaway gaps. This is what I'm looking at in Tesla specifically. Over here, this is a breakaway gap. You see the price move, pushes up, and then just runs, right? And just goes and goes and goes and goes and goes and goes and goes. There's a lot of gapping occurring through here. Here's another one, and then up here there's another one. This would be an exhaustion gap, and off to the races we go. But let's just look at the analysis here. Let's just take a measurement, and we'll say how long has it been since this gap, right? Okay, here we go. It's been 132 bars, which is kind of a long time. Typically, these breakaway gaps break in 89 days. So you can see when price gaps get old, then we're starting to see some outliers. I would like to see Bulkowski update this kind of price data. Like 2 breakaway gaps, an exhaustion gap, breakaway gap, exhaustion. You know, this is great. Like we could definitely go through here and break down the Tesla chart in terms of gaps, because we definitely had a gap, right? And what kind of a gap was it? Well, I mean, it's not, this would be the exhaustion, or this would be the exhaustion gap right here at the top of a trend. It's pretty short. It fills right away, or in 3 days. Now we've had another breakaway gap. It really does look like we're going to run down, doesn't it? I mean, that's a sell bar. That's a high volume sell bar too. We're already above the 30 period average for the day. We still have 30 minutes of trading. Implied volatility is dropping here. We're moving into a corrective trend. This makes sense. You kind of see that after we peaked here on 621, this big volume spike, we didn't get another daily volume bar with that sort of volume. We saw the volume peter out a little bit and start to pick up again as price moved higher. But now we're getting these high volume sell-offs. The 30 period volume shown in yellow will start to peter off as well, probably as the sell-off continues. Looking at the RSI, of course, once again, we have a bearish divergence, right, between these 2 peaks and these 2 peaks. We see the RSI divergence broken, and then that's a significant high, and now we start our way down again. And to me, it looks like we're finally at the end of this big push higher, and there are gaps like all the way down here towards lows, which is really, I mean, it makes sense to me because I think that we've had wave A at the first, like, ending at the beginning of the year, wave B, which is composed of 3 waves, which we clearly have, and we're getting an ending diagonal triangle at the top of wave C, which makes a lot of sense. It just looks like it needs to come down. It just looks, it doesn't need to come down, but it looks like it's going to retrace. It really does. We could be forming a larger chart pattern through here. And again, look at this. We get another one of these weird, like, rising diagonals in wave B, which is not a thing. Don't do that and call it a rising diagonal. Weird stuff. Now Apple also could correct, and that would drag down Tesla, right? Zoom in here. Looks like we've peaked out towards the top of wave 5 here at the minute degree. I'm watching, looks like minor wave 3, 4, and 5. Let's see here. 1, 2, 3, 4, 5 at the sub-mini wet, which means this becomes 2 at the mini wet degree level. I'm gonna keep count. I'm gonna work on this count here for a bit because it needs to happen, and I have not done it, and I need to. And it looks like I might have I need a little more price data. Give me 180 days, please, and then I'll go back here and we'll go over here. And we'll blow this up. Okay, there we go. 1. Duplicate this down here, label it for 2 at the mini wet degree. And then we're looking for wave 3, which seems to peak out up here. Yep. I'm gonna duplicate this, put this up here, call this wave 3. And then 4, duplicate. But you see now how we have an ABC sharp and an ABC sharp. So this is actually probably wave 1 of an extension, which is going to mess with my wave degrees. But let's just see if this is possibly wave 4. I'm just going to stick with it, and we'll see what we can do. 4, and then 5, then A, B, C. Okay. 1, 2, 3, 4. 3, 4, 5, or 1, 2, then 1, 2, 1, 2, 3, 4, 5, and then 4 and 5. So I need to put this in terms of A, B, and C probably. Zooming out. It just looks so channely. I don't want to give it A, B, and C. I want it to end on a 5. 1, 2, 3. But this is clearly 1, 2, 1 of 3, 2 of 3. Because here we go again. You have these like matching sharps, 1, 2, and 3 all in a row, and so we're gonna get those wave extensions too, right? I wonder if there's a way I can simplify that without having to clutter my chart too much. Let's see. I think I can do that by let's get a blank chart going. This is pretty blank, or it's not pretty blank. Give me create drawing set. There we go. Okay. Impulse up right here. All right. And then we come down. All right. That gives us 193.87. Perfect. Extend that to the right. And we're going to take off 100%. Nice. And now we're going to figure out these wave extensions through here. The problem is that there are 3 matching corrections after each other. And then we get a flat. So I'm looking for like 3 flats. So here's a flat, here's a flat. And this is kind of the flat right now on a bigger wave degree. Possible. So let's see here. 1, 2, 3. And then we have another one. 1, 2, 3. We have another one. 1, 2, 3. Takes us to about that same level. 174, 176. That's pretty close. So this could be the first wave 4 and 5. And then this could be a wave. Well, this is a reactionary wave. And it completely retraces this incoming wave. And it needs to be sideways, which means this is a bigger correction through here. Yes. Okay. Oh, isn't that interesting? I wonder if this is also a sideways correction. Right through there. A, and then B, and then C. And then 5. And then 4. And then 5. That could work, right? 1, 2. And then 1, 2, 1, 2. 1, 2. It's just, wow. The wave count here is just extraordinary. It's just extraordinary. It's going to be, it would take me hours to pick this apart. And it's hard because of how often the price overlaps itself. Remember, wave 4 can't retrace wave 1, right? So this peak doesn't get retraced. This peak gets retraced. This peak gets retraced. This peak gets retraced. This peak gets retraced. This peak does not get retraced. There we go. This peak gets retraced. every one of these peaks gets retraced basically, except for right here. Oh man, it does technically, doesn't it? So these could all be impulse 1, 2, 3, 4, 5, and then sideways. And this isn't like a triangle, but that's just where the correction is. A, B, and C. And then we start our next wave. This is starting to come together pretty good. Let's do this. Just do a couple checks. 3 is longer than wave 1, so it's not the shortest wave. And wave 5 actually hits that extension. So this is definitely the first impulse through here. That's 1. and we'll just make it white. And then 2 comes through here, and then wave 3 starts. 1, 2, 1, 2, 3, 4, 1, 2, 3, maybe 4 and 5, or 4 and 5. We could take wave 3 all the way over here, which is insane. Let's use an extension tool and see if we can get some clarity there. Do this. We'll clean this up a little bit. All right, there we go. Make it a little taller there. Get all of our magnets here on the right spot. Edit properties, take off 100%, give me 168, color it the same as the wave degree we're looking for, 190.87. Boom. So this could be the top of that series as well. And if wave 2 through here is sideways, wave 4 can be a sharp, and this can be wave 5 heading higher. Let's use a channel tool here. We're basically saying that wave 3 commonly has its own channel, and it's like steeper than the channel that preceded it. That looks good. 4 and 5. And this can't, see, the only thing is that this can't be an impulse because it's completely retraced by the following wave. Which is why that's why I had it going this way. So 1, 2. The hard part is like wave 1's way back here, and this is wave 2, and this is 1, 2, and then we're looking for wave 5 could extend here. It could be a wave 5 extension. 2, 1, 2, 3, 4. I mean, that technically overlaps right here. So I'm wondering if wave 4 ends and we get wave 5, and this is wave 4. 1, 2, 3, 4, 5. It's so hard right through here. This is very congested. Very congested. And this price lap right there makes it hard too. There's definitely this channel through here, and this gives us a pretty strong indication that this is its own motive wave. Possibly 3, 4, and 5. 1, 2, 1, 2, 3, 4, and maybe 5 wave extended. If wave 5 extends, then you get a sick retracement. You come back down to like wave 2. And wave 2 is way back here at like 155. So like bear that in mind. This looks like a 5th wave extension. And that would make it really hard to count and find the top because wave 5 is supposed to be topping and then it just like never does. We're going to call this 1, 2, 3. 1, 2, 3, 4, 5. This is the first impulse. This is wave 2 until we'll call it A, B, C. All right. And then from this point on, we're looking at wave 3. 1, 2, 1, 2, 3, 4, 5, 4, and 5. Yeah, wave 3 just broke. So probably looking for wave 4 to break and then wave 5. We're going to be up here for a while and show me a broadening pattern, and that would make sense. There we go. And let's see. What would support this idea is that we have A, B, and C, and then another A, B, and C wave. Is it possible that this is motive through here? I mean, it could be. It looks a little messy to be motive. You know what I mean? We're going to use our extension tool here. We're going to just be like really easy with it. Yeah, okay. Tricky, tricky, tricky. A, B, and C. These are measured moves up. And the problem with them being motive waves is that they don't really follow channels. They don't have the right look. And then you get a ton of price overlap towards the end of these waves. And that price overlap makes it really hard to get a motive count going because wave 1 gets overlapped and wave 4 gets overlapped. And that just doesn't work. And so as you've seen me do with other horizontal triangles, what we're going to do here is we're going to start looking to see if we're hitting these 100% targets or the extension targets. We got the 100% here. We had the extension here. So this, might be a motive wave, but again, doesn't have the right look. I mean, it'd be 1, 2, 1, 2, 3, 4, 5, 4, 5. It'd be a sloppy motive wave. Possibly motive. Whatever. It's giving us that upper level of resistance, which would be like a double trend line touch. Makes sense, right? So if it's not 4 and 5 peaking out here, then we're getting actually A and B, and C is going to be like nasty. I don't think we've gotten a severe enough trend down yet. Yeah, we haven't got... Ooh, unless we get that extension at 192. And what that would give us is contact with this uptrend, right? And it doesn't take too much imagination to give ourselves some sort of rising diagonal through here on Apple based on uptrend support, right? We'd be looking at 1, 2, 3, 1, 2, 3. Of course, I always say it's perilous to start one of these triangles at the actual tip of a motive wave. And so we'd be doing this. Oh, it's coming together. It's coming together. Oh, yes. Here we go. Gonna pull this down. Downward breakout achieved, actually. Zoom into the 15-minute time frame. Okay, that was a little seizure inducing. Let's see. There you go. There it is. A, B, and C, and then we start. Yeah, it still doesn't have. See, there's too much space in here. Too much space, and this looks too much like a channel. A, B, and C. 5. This has to be the top of a 5 wave. It's that these have to be waves 4 and 5. That's the only way I see it is 4 and 5. But we're giving ourselves that top for sure. Watch this trend. Once this trend breaks, it's like it's gonna be full meltdown mode, pretty sure. There you go. This ABC target through here is definitely hitting 191, which is the uptrend support. Yep. And so we get bearish reversal here. Again, I didn't count all those wave degrees. I just looked at the alternating waveforms and then looked for the channel. It's got to be a 5th wave extension. And that's why it looks so crazy, is because like waves 1 and 2 and 3 aren't so like big, but wave 5 is just ridiculous. Ridiculous. Okay, so there you go. That's where I'm at on Apple. It does look like we're at the peak of a motive wave, and we're going to be heading down lower in a corrective trend on a pretty high degree, correcting this uptrend, which is seriously super long. And that would be another reason to watch SPY reverse and head lower. Let's go to Google. See what Google's doing. Google's going down today. Let's turn on a candlestick chart, and we'll go into the daily time frame. Yes, Google is starting to make its way towards point C. I was talking about this yesterday. We're moving through this huge like triangle, and we've hit that resistance. We've had 2 consecutive touches of a trend line, so we're probably looking for a sharp move down across the chart pattern to find the opposing trend line. And this will be a motive wave, which means it'll be strong, it'll have strength. Big trading range today, pushing back up into yesterday's, and now we're seeing the price break down. Zooming in on this, right there. Yeah, brutal. Bearish reversal confirms at 116. So if price bounces around below this downtrend but above this horizontal level of support and resistance, then I would actually expect this to go up higher, in which case we'd start a new motive wave count. But for the time being, this is looking pretty bearish. Pretty bearish. Whew. Let's go take a peek at GameStop while we're here. GameStop today. Got a little doji. Again, we're kind of like in this weird triangle thing. Zoom in on it a little bit. There we go. Yeah, pulling back up into here. Make it a line chart. Get rid of some of those wicks. So we broke out. We're testing this trend. So bearish confirmation comes in here. At 227. Oh. Yeah, that's definitely a level I've been talking about, right? Right? Yeah, 2270, I'm sorry. 2270 is bearish reversal. This is the big one. 2270 or 2551, maybe 2437 for the upside. Let's go take a peek at AMC really quick. I'm going to hop offline here in just a minute. No diarrhea today. Excellent. That's so good to hear. AMC broke out of its triangle and it pushed down. Again, we're coming back up. We're going to be looking for bearish confirmation at 425. See how Playboy is doing. Playboy sitting at 170 on the daily time frame. We're down just a little bit, closing in on this trading range. BBIG is coming down. That's to be expected as well. And I don't think I looked at IWM. IWM's coming down, hit the target. Probably going to see it move all the way down through here, through the chart pattern before we see a breakout. Very possible. This is A, B, C. This is only point D. Wave E will come down here, and then we'll get reversal. Again, I think we have one more down push down in the markets before the next big push up. Zooming out, that makes sense. You know, give us a nice zigzag or flat, and then price reverses and heads higher. Looking at GLD really quickly. GLD coming up a little bit. I wonder what the dollar is up to. Let's check the dollar out. And this is what I was saying. I keep saying this. Yeah, we got this downward breakout, but honestly, the bigger wave degree says this just goes up. And if this were to go up, the bearish for equities. It makes sense. And Caravan, what is that? Caravan, CRVN? Caravan. I forget what the ticker symbol is for Caravan. Is it on here? Wow, I really thought it was just CRVN. I guess I should know that first. I should have written that one down. Oh well. It doesn't matter. We'll just put up a meme chart here and be like, wow, look, lines. That's all I gotta do for today on the live. It's CVNA. Thank you, CVNA. See Caravan. Oh, we read today. All right. Turning on the candlestick chart here. Ooh, the whack. Brutal. Brutal. Yeah, I got you. I got you. We're looking for wave 5, right? 4 and 5. Okay, that makes sense. And what was the amplitude of wave 1? Let's just do it quick and dirty here. We're looking at 98%. Wow, $6. Of course, that same range is kind of not comparable here. This is not going to be quite as high. 57%. Meh, it's not as strong. That's okay. Looks like to me 1, 2, 3, 4, 5. Oh, 4, 5. Or 3 extended. And then 4, 5. That'd make more sense. Make more sense. $6 to 13. What's the top of wave 3 though? Like 40. I mean, that's just where it has to happen. That's where it most likely occurs, is in wave 3. And then you get 4 and 5. Looking for retracement now. And on something like this, it's really hard to say where that's going to be. Let's just do one of these guys really quick using the price extremes, because we're already way over that 161-point extension. This thing is just wild to me. This has been one of the most... This has been a very sharp correction. Very sharp correction. I expect that trend to reverse similarly in a sharp manner. Probably finding down support at 1936. We're going to take this. We don't get bearish reversal for a long time. Like, that was a big, strong motive push. You know what I mean? We'll label this one too. Bearish reversal. Okay, there we go. We covered a lot of bases today. And this cat has been here the whole time. This one is called Sophia. She is the most needy, and as you can tell, she got a shaving. Yep, she just wants to cuddle. That's all she wants. So I'm gonna hop offline, and then I'll make a video after the market's closed. Thanks for tuning in. It's been a good time. Happy trading. And it's gonna take me a minute here to figure out how to stop the stream, because if I don't do it in YouTube, then it like confuses the freaking, oh my goodness, cat, you are being so ridiculous. Let's see here. I need to go into the into my lives, and then I click here, and there should be a way for me to this cat is ridiculous, seriously. Turn this thing off. And I just did it. I think it go over here, and then, oh goodness. Yeah, the control room. That's what it's called.